Good evening, everyone, and welcome. The market's kicking off the month of October and the final quarter of the year with a massive sell-off today, sparked by worries mostly about global growth. Not helping? Some disappointing economic data out today showing a slowdown in U.S. manufacturing in September and a drop in construction spending in August. Not even good news about private sector hiring. And some strong auto sales last month could blunt today's big declines. The major averages are now at their lowest levels since mid-August, and the small-cap Russell 2000 index officially dipped into correction territory, down 10% from its July 3rd high. Here's a look at the damage at the closing bell. The blue-chip Dow stocks off 238 points, just off the lows of the session, but closing well below the 17,000 mark. The Nasdaq lower by 71, and the S&P 500 lost 26 points. Utilities, the only sector in the green today. With the new quarter off to a dismal start, what do traders and investors have on their agenda that will drive the markets for the rest of the year? Dominic Chu takes a look.
The fourth quarter is finally upon us. It's a period of the year that many experts think is a more positive one for stocks. But this time around, investors will be tuned in to a number of different items on the market agenda. First of all, there's the economic data, which has painted a more mixed picture as of late. Some of the most important data over the course of the next 3 months will be on the jobs front, as well as consumer spending as we head towards that all-important holiday shopping season. Second, we're getting ready to kick off yet another big earnings season. Many investors are looking for a reason to justify the stock market that still hovers near record highs. Growth in corporate earnings and sales could go a long way in setting the tone for the next few months. And third, the impact of the Fed is still a huge variable. Our nation's central bank has been slowly reducing the amount of stimulus in the system, and some experts say that there's no telling how markets will react to the so-called Fed taper. After all, we've never seen anything like the Fed stimulus program in the past, or what happens when you try to unwind it. Now, when it comes to where traders want to see strength in the stock market, many say look towards the banks.
I'd like to see some stuff come a little bit better out of the financials, both in their activity. I'd like to see bank lending pick up. There's some feeling that some of the regulatory safeguards that have been put in are sand in the wheels. I think if the financials picked up, I would feel a little bit better about it.
Let's not also forget we've got what could be a huge shift in the political landscape in America, with midterm elections just a little over a month away. All of these things could be potential catalysts for the overall market, so investors are going to want to stay vigilant. For Nightly Business Report, I'm Dominic Chu from the New York Stock Exchange.